Hey, welcome everybody to the 40 Finance channel. Hope that you're all doing well. And today, there's plenty of news out there on the negative side, and obviously all of our thoughts go to those people in the Ukraine. And there's just a lot of negative sentiment, particularly if you throw in what I focus on here on this channel, and that is the stock market. There's just a lot of non-belief that stocks have much positivity to them, and there's a lot of questions being asked about where do we go from here. And since a lot of those bearish thoughts, in my opinion, get covered in detail, I'll assume that you know them all, and I thought I would just share a different perspective, and that is some reasons perhaps to be bullish on the stock market right now. And for me, I can tell you that I'm taking advantage of some of these downturns that we see on particular days. I've said many times that I'm adding in small lots across existing positions. And then as sort of my benchmark, I've been buying into the QQQ during this time. So I sort of reached a conclusion, particularly with FANG stocks. I think the FANG stocks are in great shape for the long term, and I think honestly for the back half of 2022. So instead of trying to pick which one of the FANG names, and with FANG you can throw in Tesla, Nvidia, Netflix, however you want to do it. You know what I'm talking about. I think the QQQ represents a decent option, particularly if you need protection from the downside over the long term. So that's what I'm doing. And the reason that I'm so confident about it, despite all the storm clouds that are going on, is twofold, right? So one, I don't need the money tomorrow, right? I don't want to lose money necessarily. I don't mind paper losses, but I don't need, say, the QQQ to 3x so that I can buy a new house or something, right? That's not the goal. The goal is much longer than that. So with any good company that has meaningful earnings and a bright future, I would argue that you could take advantage of this time with confidence if you believe in whatever stock that you're looking at. And it could be Apple. It could be something completely different, say Home Depot. I know some people are in the defense stocks right now, which, there's a lot of promise that defense spending would likely go up here, certainly in the short term. And then depending on your take, oil stocks are very hot. Now, I'm under the opinion that oil stocks, they could have higher to go. I think eventually, though, they come down. So that makes it hard, right? If you're doing short term, which I don't traditionally do on this channel, I think oil stocks are an interesting opportunity. I won't personally be touching them because I think there's a cliff to be had with oil stocks. I don't know if it is a month from now or 6 months from now, but I'm not interested in worrying about it. So I'm sticking with the stuff that I know, and I think we can all agree when you think about the Qs, when you think about the FANG names, it's really hard to imagine a 2, 3, 5 year future where those names are not a big part of what we're doing here big part of what we're doing here in today's world, right? So I'm going to go through some what I think are bullish sentiments, and then we'll get into questions. I see Lion is here. He's talking about Starbucks, and DH is talking about Roku. I think both of those have their own case to them, right? We looked at Starbucks last time, and I think somebody had asked a question. I just eyeballed it, and I thought it looked attractive. I really did. We'll take another look at it, Lion, here in a second. And then as far as Roku's concerned, Roku, the discount on Roku right now is certainly attractive. And it's one, so I have like 4. If you count the TV in my office, I think I have 4 Roku TVs. So, one in the family room, one in the basement, one in the bedroom and then one here at the office. So I'm a power Roku user. And it was a stock that I was certainly interested in 2018, 2019, and then it flew to the moon, and I kind of backed off, and then they started to run into some challenges. We weren't sure if the Google contract was going to be renewed, and then, you know, just Google started making TVs. There's just a lot of stuff, and I never got into it. But I will tell you that one of the exciting things behind the scenes with Roku, and if you're an investor, you probably already know this, it's not about selling remote controls, right? It is about the future of TV from an advertising standpoint and how viewerships make money. So think about it much more in the way of a YouTube. You know, obviously it's not YouTube, right? But that is where that advertising model is really going to be Roku's bread and butter, assuming that they pull it off. And I think they've got a shot at it. I don't like where the competition stands with Google and Amazon pushing their own operating systems, but on the same token, there's a certain price for everything, right? Just like if you go to a store and you look through the clearance aisle, and it's almost like every product has this sale price that you'd take a gander on, you know, assuming that you can use it. And Roku is one of those for me. I don't know if I've ever thought about what my number is, but we'll have to keep watching it. And the other thing, last thought on Roku, is unlike some of these other names, they are profitable. Okay, it's not a huge EPS. I think it's under $2, but it's there, right? They're making money, and if the advertising model continues on, and we know that a transition is occurring in television advertising, and you know it's happening now. It's not going to happen like a light switch, but it is going to happen, and it's going to happen over the next 5 to 7 years, and that's what you're looking at with Roku if you really believe in the case. So Lions got LMT to the moon. Oh, nice. Let me go through my bull cases because that's what I promised real quick, and then we'll have some fun from there. So the first thing I want to show you, let me bring this over. Actually, let me, I was going to try to share, and never mind. I was trying to figure out a way to put the URL in here. So this is technically a free part of the Wall Street Journal. I always get to it by Googling, because as soon as you click on the Wall Street Journal, it doesn't take very long till they bump you out. So if you type in like forward PE for QQQ or something, you get this result. So I'm only telling you that in case you want to go look at it yourself. I will tell you too that the longer you stay on this site, the more they want to kick you out and get you to buy a subscription. But you should be able to flash on this real quick to get this information. And you can see that this one's dated on Wednesday. It updates, I think, weekly to some degree. But all right, so what are we looking at here? Well, what's cool about this is it gives the P ratios for, you know, the broader indexes. So obviously Dow Jones, and what we're seeing, so this, if you can see that tiny little cross that's above that date there, that's the trailing 12 months, and then this little uptick, whatever that symbol is the forward PE. So Dow Jones, you know, surprise, surprise, it's down from last year, no big deal. We expected that, but it's still going down. You know, the forward PE is going down. That's a good sign. It's exactly what you're looking for, you know, when you look for stocks. And I realize it's going down, you know, in the neighborhood of pennies. But what it tells us is the EPSs are going up, right? Because this is a constant price across these two columns. So that's one reason to feel good that it's heading in the right direction. It doesn't necessarily give us the long-term average. We'll look at that in a second. All right, now I like to go down. I'm not as big of a fan of the Dow as I am of the NASDAQ 100. And look at this. A year ago, you're at 38, 31.76 today. That's the trailing P ratio. The forward is under 25 now for the NASDAQ 100. S&P, of course, that will always be a little bit lower because it's got some, let's just call them regular companies, not necessarily all high growth tech. And now you're under 20 for the forward PE for S&P 500. So think about it in terms like this, if you want to take a bullish view. I would say that this may not be the cheapest it's ever been historically, but if you're buying the S&P 500, the SPY, and you're buying it for the next, or just say a longer duration, whether it's a year, 2, or 10, you have a better than not chance of making your money in this fund just over time because the EPS is growing, and that's exactly where you want to be. And with both of these, I think the beauty in a crazy roller coaster market is the fact that they're market cap weighted, right? So let's just pretend a scenario. Let's just pretend it's Apple. You know, we'll be in big trouble if Apple has problems. But let's just pretend that Apple goes to $99 or something like that. It will trend lower on the market cap standings for QQQ and the SPY. It won't be booted from the index, but it'll go from the top holding, let's just say, to the 12th holding, for example. So you've kind of balanced your risk there. And let's just assume on the flip side that Google goes, that they outperform their EPS and their stock price goes up a bit. And just like Apple's went down, well, then Google will take over the top spot. And you didn't even have to do anything during that time. And I love individual stocks, and I love trying to pick individual stocks or you know, like project individual stocks. But in this roller coaster time period, if you do nothing else, you know, you have to consider S&P or QQQ. If you're dying to invest, but you don't know where to go, there's worse options than this. And if by some, you know, depending on your budget, if you got to 100 shares of these, then you obviously have other options too, in particular covered calls. So this to me is a reason to be bullish. I know that the naysayers will call out these forward PEs and say, well, historically they were XYZ. Fine. I'm just telling you that these forward PE numbers are not bad, and they are in good position. Certainly compared to a year ago at 43, they are in a good position to make you some money over the long term. All right. Let me catch my breath. And we've got, this just came out. Yardini, they do P ratios that they, you know, somehow they calculated. Let's just go ahead and assume that they're smarter than we are, right? So this came out on March 2nd. I'm not going to question any of their methodology. We're just going to jump right in. All right, so forward P ratio for S&P indexes. So S&P 500 large cap, this dates back, hopefully, let me check I can get this bigger on the screen for you. Okay, this does go back to 99, so this is multiple years. And here we are on March 1st. Now, some people on the bearish side will look at this and say, well, gee whiz, they've got a long way to go, right? So there's COVID. There is the Christmas Eve-ish meltdown of 2018. And you're riding in here at about a 19 or so PE. I look at it from the bullish point of view is that we are now back to pre-COVID levels, right? So we are back to, this looks like, well, this is the one I was looking at. We're not quite there yet. So that would be a 17. We're on a 19. But we are getting close to pre-COVID levels as far as dips go. So if you're timing the bottom, right, maybe there is room to go, right? And I'm not going to argue that. But if you're saying to yourself, I want to make sure, and I'm looking at the wrong one, wasn't I? Here's pre-COVID. This one's pre-COVID at about, you know, about the same. So it was flat. I thought I did that research before I came on here. Long story short, let's just call it flat pre-COVID. You know what I'm saying. Companies, many companies have done awesome things since COVID. Some companies, like the service industry, travel, etc., have been struck, and we know that. But we do know that, let's just say Google's, AMD's, Targets, all these other places have improved how they operate in stressed environments, and yet we're staring very close to a forward PE that's about the same before the world, hit a very tough time. Mid caps, let's see if I can line this up right this time. So here's 2019 on mid caps, and we're below that. Small caps, here's your 2019, or AKA the beginning of 2020, we're way below that. And in fact, on small caps, you can make the argument, it's not the lowest it's ever been. Here's your financial crisis, but you're certainly getting down there. So if there's small caps that you like, and I have several that have gotten just their ass kicked, you'll have to be selective. This is an S&P 600 small cap, right? So there's 600 names in here. It's not like you can just throw a dart and pick one, but wow, small caps way down. Let's see what else we got here. This is forward P. This is weekly, and I'm just going to assume it tells us the same. Is there anything else in here? Forward P ratios for S&P stock indexes. Oh, and it's just charting them all together. And you can see on this, I guess the call out, of course, would be that mid caps and small caps have certainly dropped significantly more. So if you're looking at mid caps and small caps, then you're looking at companies with a market cap below 10 billion. I believe that puts you in mid cap land. There's 400 mid caps, there's 600 smalls. So again, you have to pick out your stocks. You can't just bet on all of them. But that's a nice trend line if you're looking for value, right? If you're looking for value, and this is a forward metric based on forward earnings projections. What do we know about earnings projections over the past 60, 90 days? They have been cut. This graph incorporates it. I didn't make this graph on January 1st. Yardini made this graph on March 2nd. So it incorporates, say, PayPal, which is one of my stocks that got absolutely destroyed. Facebook, it's in there, right? It's taking into account where they're going to go from the news we already know. So to me, that's a very, very bullish sign. All right, point whatever we're on. Number 4, let me get to my news. So this is Seeking Alpha. By the way, as always, if you're interested in Seeking Alpha, I have a special discount for you in the description. Help support the channel. Thanks to everybody who's done that. I hope you're enjoying it. What I was trying to find, I'm going to have to expand this a little bit. Here we go. So when you expand this news column, Seeking Alpha does a good job of breaking out, what is the news that you're looking for, what's the sort of topic. And guys, the buybacks in this world, I've been talking a lot about buybacks, and so we all know there's good and bad sides to buybacks. We know the good side is probably what Apple's doing, right? And if you don't know about Apple's buyback, you should go read about it. It's a very, very interesting use case. Google is about right there with them, but far and away, Apple is the #1 buyback company. That is why people like me can never project with any accuracy whether Apple will be able to sustain their plus 10% overvalued standpoint. They always blow it out because they're buying back shares, right? And on this list, which is, there's not even a certain, cap to these stocks, people are buying back shares. And if you're looking for potential opportunities to get into stocks you like that are also going to buy back some shares during these uncertain times, I think that there's some good play. I would actually argue that there's an element of safety when people are buying back. So we've got MGM, Victoria's Secret, Lumentum, Citigroup, no, not Citigroup, I don't know how they got in there. Rackspace, a small cap. Let's look for some other big names. I mean, you see how many names are in here. Scientific Games, Big Five Sporting Goods is a popular small cap stock. Kohl's has a lot of weird political shit going on, but they're buying back 3 billion shares. Holy cow. Steel Dynamics, Good RX, I think they're struggling. Yeti is a company that's taken a very interesting position. They are actually reducing inventory, store inventory, and going direct to consumer. That's not across everywhere, but they are pulling some stuff out of stores to sell directly on their site. It's a very interesting news update that they've had. Then we've got, who else is big? Berkshire, I mean, gee whiz, buys back $6.9 billion in stock in Q4. And, kudos, I know Lion's got some Berkshire. He's still out there. You get the point. Even Under Armour, classic underperformer with Under Armour. There's a game to Under Armour stock right now. I think that it's worth looking at if you believe in the brand. Plus, they're going to do this accelerated share repurchase. Foot Locker, I think Foot Locker's in a little bit of trouble because Nike's pulling back on them, but they are going to buy back 1.2 billion shares, which is huge. So that is another reason to be bullish. And then my final one, and then we'll kind of open the floor. This is QQQ, which I'm sure you're tired of hearing about. But let me tell you something. Or let me show you something here, if I can pull it. I'm trying to make adjustments so you guys can see. I'm getting better at this. So this is 5 years. I believe it's weekly. Okay, so we're weekly. And what you got right now today, you got the regular Q down 1.26%. Today, guys, is a RSI, which shows up on the left-hand side of the screen. So look over here, right? And watch me go through this. We're in the 40s. We're now in the 39s. This is high tide to buy the Qs from an RSI standpoint. And if we skip right now and we go back to other days, right? October of 2018, you're in 30s. You got some 40s. There's some more 30s. And we know what happens. So there has not been a ton of opportunity to buy the Qs in the 30s over the past, on a weekly basis over the past several, I was going to say weeks, but it's been almost years. COVID crisis, RSI low was 30. You're at 39, okay? It goes up from here. I don't know if this is the bottom, but I'll tell you that it goes up from here. And I think, let me see the max. I don't know what this is going to do. So this apparently goes back to 2001. Here's great financial crisis. It's going to be hard for me to hover over this. But you see the Qs are in the blue line. So terrible, terrible times. RSI in the 20s into the 30s. And no shocker, it went up from there, right? Came down again. This is 40s and 50s. Let's try to find another 30s. And here's another 30s, 40s era in 2011. Of course, it went back up. There's reason to be bullish out there is my point. And I want to do your questions. But those are my core reasons for being bullish, not to mention, I want to show you one more and then I'll stop. So Visa, if I can find it. This is a bad news headline. Of course it is. 5%, so this is BS headline. So 5% of revenues exposed to Russia, Ukraine. This number is deducted from 2021 revenues. So first of all, it's not even applicable in my opinion, because this year, obviously in Russia this year and Ukraine is a very different place. Now, meanwhile, not linked down here, and this is not just for Visa, this is for consumer spending. Meanwhile, the company's USA payments volume in February was 145% of 2019 and up 5 points from January. So the consumer in the United States is strong, all right? The consumer is out and about. Go look at the retail numbers. Retail is worried, understandably. But when you think about the United States consumer, what is coming up, what is basically happening right now on March 3rd? Tax season. Generally speaking, bad news for me, but there are a lot of people, particularly lower income folks at the median line or below, that are going to get a tax refund. And if you're worried about tax refunds because you're worried about the child credit that was given out, even the folks that took that so that they got the monthly payments, they were only given the upgrade portion, right? So I'll try to say that better. Whatever they got in last year, 2021, the refund from 2020, it had an X amount of child care credits in it. Okay, so let's just pretend they got $4,000 back from their tax return. This year, we had the enhanced child care tax credit, which gave more money and the option to accept that money over the course of 2021 on a monthly scale. Now, if you decided to accept that money, you got your checks every month. Those checks are now done. The program is over, okay? You did not dig into your typical refund. The sort of Trump era refund standard deduction shit is all the same. Hasn't changed. Some people who opted to not receive it monthly will basically be looking at a heck of a refund. You know, potentially double, but every situation's different. It's impossible to project that. So don't worry. I've seen some headlines on the CNNs and whatnot, like, here's why you should worry if you took the child care tax credit. So that's not true. You do not you do not have that money taken out of your rate standard refund, your historical average. It's not a part of that. It was just an additional program that was paid out monthly through the end of 2021. If you took it monthly, you got good stuff. If you didn't, good news, you're going to get even more in this tax refund season. So, all right, let's see what everybody's up to. Switch through here. Okay, so we said hi to DH and Lion. DH was, we talked a little bit about Roku. Roku might take over with them being a platform, might beat Disney and Netflix. You never know. Lion was talking about LMT. I gotta look at that one. Oh, Lockheed Martin. Okay, yeah. So Lockheed Martin, it would be interesting, Lion, with Lockheed Martin, how long you staying in, right? So what's I saw a stat somewhere. I don't know if it's true. Let me switch to Yahoo real quick. So let's just take the Qs. Let's go 2 years. I heard a rumor that Lockheed Martin has outperformed the S&P over, let's just say, the past, well, this would be 2 years. Let's go 5 years. Now, I'm comparing against the Qs. Let's throw in the S&P. Make this one some weird purple. Yes. So there is where it was. So if you take out the Qs, which is the blue line, Lockheed Martin over a 5-year stretch. It doesn't look like they're quite there yet, but they're on the cusp of matching the performance of the S&P on their most recent run-up over the 5-year stretch. And prior to COVID, which would have been roughly here, they were outperforming the S&P. And actually, even after COVID a little bit, they had some downplay here. So Lockheed Martin, what else can you say about that from an investment standpoint? Just a great investment, and it would appear, I think, to most people that defense spending is going up, right? I can't imagine a world anytime soon where we say, you know what, we've got enough missiles, particularly after this Russia thing. P ratio of 19, EPS of 22. Let's get some historicals here. Forward PE of 15. Look at that. Even with the recent run-up, Lion, LMT is still, the worst it's doing is the historical average of forward PE, which is amazing. Where do analysts have this? I don't know if analysts would have updated this much. 22 last year, 26 this year, 28. They're saying minus on current year sales. I bet you that world's changing though as we speak. I bet you there's some orders coming in. Next year, 2%. I could see this outperforming all day long. And then there's a dividend in here somewhere, but I didn't catch it. Dividend 2.45% on today's price. Yeah, I can understand why people are jumping into this one. I really can. There is another. There's another ETF play. I'm gonna forget it. I think. Is it ITA? Yeah, this. I was listening to the guys on the Compound show. I like those guys. They got a great show. They weren't necessarily endorsing the ITA, but they were talking about, like, if you can't figure out which defense one you want, this one has Boeing in it, which, so you got your LMT, you got Boeing, you got Raytheon. And Boeing, of course, is a bag holder stock right now, but there's got to be a time when this eventually breaks back, right? I mean, COVID, what was it? COVID low. So you were flying with Boeing at 318 before COVID. You lost over 50%. And even today, since the COVID bottoms, what is that? Maybe up 20% from the COVID bottoms. That's nuts. And it's only a matter of time. If you watch the thing you can watch on Boeing is the orders. So every quarterly report, they share orders that come in, right? Like, United Airways bought 5 planes, or, contracts, whatnot. And Boeing's going to get better. It's taking way too long, in my opinion, but it's going to get better. And I would imagine that this current environment, while you don't think of them as a defense contractor, they have several plays within the defense space. So watch Boeing. They might get a gust of wind behind them through this whole thing. Lion says, bye, Baba. I'm losing interest in Baba every day. But I stand by the fact that you will rarely see a fundamental opportunity this strong. It's just not for me at this particular point. I did not read the latest earnings report. I know it got some critics to it. But anyone who buys it, I certainly am not against it. I can understand why you would buy into it, to be quite honest with you. It's just not one for me. And I'm sticking with my United States stocks for now. And I think that's the thing, is the international atmosphere right now has only reiterated my penchant to just buy USA stocks. Like, I don't want to figure out who's going to attack who. Where Lion lives, I don't want to figure out who's going to shut down the streets and make people do things they don't want to do. It's too much. We have our share of problems in America, absolutely, for sure. But I will say that generally speaking, commerce activity is we go through lengths to keep the consumer rolling. And USA will be consumer activity first, problems second, in the way that they chop people off. And that to me is a huge bonus, good or bad. All right, DH says Cisco is up because of cybersecurity. Also, I believe Cisco is in our buyback category. Relatively healthy one. Cisco is approximately the 13th or 14th name on the QQQ. Let's see if we can get some buyback information. And let me do a search here. Okay. No numbers. That's stupid. Added to its stock buyback, but it doesn't say how much, which is really would have been helpful. But yeah, Cisco's buying back big, and not to mention that even though it's a dinosaur tech, so to speak, it hasn't been horrible over the stretch since where's COVID? Where's COVID crash? Here's COVID crash. You were at 46, down to 35, up to 47. I'll imagine you had a bad earnings report here. Back down to 35, and now, $55. It hasn't been bad. And now they're buying back quite a bit, I believe. So something to watch, absolutely, for sure. And then, yeah, so DH was talking about potentially cybersecurity mixing into that, and I agree. Cybersecurity certainly has gotten a lot of press here recently. I've been watching Cloudflare. I just can't find, it's not profitable, and I promised myself no unprofitable stocks. I was waiting for it to go on super sale, which would be right now somewhere under $84. The only problem is I think I would have to break my promise to myself. I like Cloudflare, though, because I've actually used them in the development world on the internet side. Well, hold on now. Look at that. Positive 3 cents could bring your PE to 3,800. And then, a couple cents. Here's the story, though. Obviously, it's all growth. But even this price to sales, who's going to buy, in this environment, who buys 41 times sales and says this is the bottom? I don't think you can. And they're all like that. All the good cybersecurities except for this one. Fortinet actually has earnings. Let me switch to annual. They have earnings, $5 plus a dividend plus stock buybacks. This is a little high, but you are in tech. You have to, make your own call on that. And then price to sales down here on Fortinet is 13, right? Next year, maybe 11. And I imagine they've been in this run up. Let's see, year to date. Yeah, they're on this Ukraine cybersecurity, stock pick that everybody's making. I just don't know what's left of that pick, right? I don't mind this company. 284. So if their EPS is $5, and let's just say they're at 300, that brings your forward P down to 60. I'd have to go on Yahoo and see what the historicals are on it. All right. Yeti products are so overpriced. Hey, I wasn't saying that I get it, and absolutely get it, but They have enough demand that they're pulling out of retail stores. Maybe it's not like completely, but they're pulling back a decent chunk of their models and going direct to consumer with those. So that it must be working out well. But yeah, $400 for a cooler. And I'm probably older than most of you guys, so I grew up in an era in the 80s where you're talking about the stupid igloo coolers. And guess what? They were fine. You put ice in them, drinks were cold. And they didn't weigh 6,000 pounds. Well, they did with the ice and whatnot. But, and then on the bright side, if maybe you had a couple too many and you took it to tailgating and you left it there because you didn't feel like carrying it home, it didn't matter because it was like $25. So there's some understated beauty to the old igloos. You just have to think outside the box. Dark Madness is here talking about roadblocks. It is definitely in a downtrend, but let's bring it up. It's not profitable. I like the concept. My kids don't play roadblocks, and the only one that really would is my youngest, who is in 3rd grade. He's a Fortnite kind of person and Madden football. But I will say, I'm sure everybody here would agree, like I'll go to restaurants where kids have to wait, in line with their parents, wait for a table and stuff, and you'll see people playing it all the time on the phones and the iPads and whatnot. I don't know what they got hit with. Let's see what SeekingAlpha says. Yeah, so we knew they're not that far off of profitability, but for whatever reason, they're not making any improvement as from an analyst perspective. Doesn't mean they won't. And then here's what probably killed them. So see these 20s, plus 20%, plus 20%, plus 20%. That's the expectation with a company like this. And for whatever reason, these have come down here in 2022. Price of sales is at least under double digits, which is a good starting point. It's tough to say, though, what the bottom is because I don't know what else is holding it up. So, yeah, I don't think it's a bad 5-year experiment to see where they go. And I like the concept of, a metaverse-ish play with their own currency. I don't know what the Roblox dollars are called, but, they sell a shit ton of gift cards. So I don't mind it at all. I just think you got to wait. I don't know. I don't know if 45 is the buy point or if it goes lower. That's the only struggle that I would have with them. Juan's here. Juan's 27. Should I focus on maxing Roth? Yes. Or a brokerage account. So, yeah. And Derek Ridland's here. And, yeah. So the Roth is supposed to be your first check mark, Juan. So good luck with everything. And Derek says, unless you want to work the rest of your life, this is probably true. Yeah, so like the standard textbook, everything is do the best you can in kind of pre-tax accounts, or in the Roth case, you pay the taxes up front, but it's a tax, what I call it, tax sheltered, I'm not sure. But those are the ones you're supposed to work first, and then you work on your retail account, if you call it that. They also call them taxable accounts. Taxable accounts and retail accounts are the exact same thing, just a different way to describe it. And so when you make, let's just say we made $1,000, and by selling, you have to sell your positions to make that money. And your taxable account, it goes down as ordinary income unless you've held the stock for at least 1 year. Then it goes to capital appreciation or something, and it gets taxed less, but everybody's situation is different. The only nice thing, if you're young like Juan is, with a retail account that you may not be able to get, I don't think you can do this with 401ks and Roths, but The money you build up in your brokerage account, even if you're just doing ETFs with limited downside, you can have that margin, right? And margin doesn't have to be buying more stocks. Margin can be anything. You can take the money out. So let's just pretend you managed to get $50,000 in an account, assuming they were all like quality securities, aka Apple, QQQ, SPY, things like that, not SoFi and Smile Direct and stuff like that, then you would probably qualify for a 25% margin account in that realm on your 50K. So that I think, what would that be? Would that be 25,000? I don't know. But you see what I'm saying? And you could literally withdraw that money and you have to pay interest on it. But if you just have a short-term thing, like a good example would be, sometimes when you're buying a house, or let's just say you have a renovation, and the renovation or the house payment requires a big lump of money up front that you need quickly, and you have a very safe plan to pay it back quickly, you could just withdraw that money from your margin. So let's just say you need 10 grand. You know how you're going to pay it back, let's say because you're getting your tax refund, whatever, then margin's perfect. Take your 10 grand, assuming you don't have a savings account to do the exact same thing, and put it towards the thing, and then just make sure that you pay it back as soon as possible, because you get, dinged on the interest rates. But short term, it's a nice thing to have. Riffraff, I do have some small Bitcoin. I can never show you guys because I'm on Voyager and I haven't spent the time with my little quasi studio thing here to show on my phone. So I have a small amount. I use Voyager and I've been buying more, not just Bitcoin though. So I need to do a video about this. And to be 100% clear here, this is like a $2,000 account. All right, this isn't a shit ton of money. But it's money. It's enough money that I would be pissed if I lost it, right? So in my Voyager, I bought the minimum, so Voyager coin, whatever that is, if you get a certain amount of those, you get a bonus interest rate, and you get a bonus like reward structure, whatever. That was like at $4, and in the meltdown, it went to like $1.50. So I bought 150. So I bought 100 Voyager coins so that I could get the tier, right? And then from there, I already had been buying some Bitcoin and some Ethereum to the tune of just a couple grand. And then here recently, I'm doing an experiment because they're giving 9% on the US dollar coin, right? That give or take stays within $1 range. I mean, I don't know how much of a scam that is. I have no idea. But I know one thing, that for $100 and a 9% interest rate, I'm going to check it out. I'm going to see what happens. So that's what I did. I need to do a video on it, but it's small potatoes, riffraff. So that's kind of why I don't talk about it, because I don't want people to think that I'm saying crypto will die. I believe in it. I believe that it's worth a bet, certainly in this environment that we're in right now, but it'll never be like a huge part of what I do. So hopefully that makes sense. Oh, DH, I was looking at Cisco. You were talking about a completely different stock. And I'm sorry. And I go down these questions and I go in like this chronological order. So you have CISO. I bet you Cisco has some opportunity, and because they do all that networking equipment. But here is what DH was talking about. And I spent a long time on the wrong stock. I don't know about this one, but Cyber Centennial might be worth a look for some of you guys. So bad on me for picking the wrong one. Yeah, there's no analyst coverage, so it's hard to project where they're going. To DH's point, though, it's up 33%. We're guessing because it's cybersecurity and all those other stocks went up. Derek says, I saw someone did a video on Lemonade. Yeah, down 90%. So here's the thing on Lemonade, and outside of the person who probably pumped it the most, which we all know, was a little bit disappointing for a lot of people, meet Kevin. I don't care how you algorithm your life insurance, you're still selling life insurance. All right, so keep this in mind, guys. Life insurance, which I have, you have to have it when you've got kids and stuff, you can't leave your family hanging. You can buy life insurance stocks. You don't have to buy Lemonade with some crazy algorithm that says it's going to solve all the world's problems. There's a bazillion of them out there. In fact, there's companies out there that not only sell life insurance, but they sell other kinds of insurance that are going to be much more investable than Lemonade. And on top of that, what you have to remember about life insurance is it's almost, it goes in cycles. Okay, so when people have extra dollars, they buy more life insurance. Or they tend, like sign-ups for life insurance start to become more fruitful because people are like, yeah, you know what, I finally have this extra money, I'm going to buy it. And then when times get bad, poof, man, people cancel left and right. They get done paying for it. Like somebody else put together like $100 policy and everybody in their family gets like, some great benefits if they get picked off. But then they cancel it because inevitably they're 20-something years old, 30-something years old. They're trying to pay for a house, trying to pay for kids. Lemonade is not the answer to that problem. I don't care what the algorithm is. If the algorithm says that they may be able to offer a lower price of life insurance to the same person, and maybe their like conversion rate is better because of the way their cart or whatever shit is set up on their website, fine. The market for life insurance is as predictable as it could ever be, right? People go in age ranges. Certain age ranges buy this type of product, certain age ranges don't. And then, of course, people kick the bucket and it's an escalator, and there's no like sudden new market of life insurance interest, right? We're not going to wake up tomorrow and somebody says, oh God, life insurance demand is crazy right now, right? Everybody's signing up. It doesn't happen that way. You don't give a shit about it till you're 25-ish or when you're married or whatever. Then you kind of sort of care, but you're not buying, the premium plus. And then you get to the 40s where I am, and you have to have it unless you want to leave a lot of people hanging. And then when you get to your 50s and 60s, you pay a shit ton for it because they know you're about to fall off, right? And they make it hurt all the way up to the end. So there's no magic formula for life insurance. I don't care what an algorithm tells you. Derek says, how do we feel about Crocs? P of 7. Being crushed because COVID is over. So I've had some people ask about Crocs, and I thought that the fundamentals looked good. I'll try to bring it on the screen. I think it was the sales growth that is the kicker. Although this isn't too bad. $10 of EPS on a $76 stock. That is, we looked at Cloudflare, right? Different types of companies, but they're blowing them away. 4P under 10. Sales growth, potentially 50% this year, and then double digits in the out years. I mean, I don't think that looks bad. I would have to dig in. The only concern I would have is just since I don't wear those shoes, I just want to know what the market looks like. Do people like them still? Like, how's the demand? Derek brought up the medical industry, which they love them, and they've been huge there. I don't know why that market would necessarily dry up post-COVID, because it's not like, all I read about is shortages of doctors and nurses, but what do I know? But yeah, I mean, what are you going to say on Crocs? Fundamentally, 100% there. Dig in and try to figure out the demand curve on that one and see, like, I think the biggest thing for them is just opening new consumer segments, right? So who doesn't buy them now? And how can we get them interested? We know kids like them, or my kids did anyway. And we know, medical profession. I'm sure there's some others. So that's where if you're the marketing genius at Crocs, you have to introduce it to a new place and make it cool with people who aren't thinking about them right now. All right, Sniff's here talking about Micro Focus International. It was 7% today. Annual dividend of 8.6. Hoping it'll be a good long term. Let's take a look. MFGP. First, I'm going to see what they do all the way down here. Engages enterprise software in UK, US, Germany, and international. Infrastructure software managed on a portfolio. Application modernization, connectivity, I'm gonna have to look at their website. I didn't understand that. Well, they helped Jaguar Racing succeed. Okay, so releasing applications. So basically, enterprise companies trying to get new ideas out quickly. Oh, for Christ's sake. Interesting. So I'm without knowing this completely, bridge the gap street. Okay, so in the corporate atmosphere, think big companies, okay? It is a big ass deal to launch new IT projects, and it is a major pain in the ass. So it looks like these guys help in that world because that's a high risk world. Right? So if you are, let's just say, Gap, and you have this website storefront and you want to put a new shiny object on it, how about buy now, pay later? You just worked out something with a firm and you want to put it on the site. Well, it's not as simple as like, you just don't go up to somebody's desk and say, put this on the site, right? It's got huge iterations, not to mention back-end connections to payment structure and whatever. So it's not a small project by any stretch of the imagination. And conceivably, that's what this company does, is you would say, like, hey, we want to test 1, 2, 3 things this year. We're worried about the risk. And if they deliver on what they're promising, they would help you mitigate that risk and but still be able to produce the project quickly. And then obviously you need to analyze the project afterwards. So it could be interesting. I don't know a whole ton about it. Doubt it. And it's got a little bit of coverage here. One analyst, I guess. Forward PE of 3. So that's not bad. Revenue. This doesn't give the revenue growth. Let's see if we can get an answer. So this year, maybe 10%. You know, it's one analyst, so keep that in mind. So this negative 6.29 is almost irrelevant, because if this guy or girl didn't update their numbers recently, then it could be wrong. Revenue, oh, that was EPS, by the way. This is revenue. You got more analysts on the revenue side. I don't know why they're saying down, but they are. They're actually trickling down. Anyhow, you just have to read more about it, I guess. All right. DWAC keeps going up. Used to be on Voyager until CEO prevented me and thousands of others from withdrawing. He claimed it was for a security upgrade. Interesting. So with Voyager, the reason that I joined them was, if you guys, so back in November, I think it was November, Mark Cuban did a partnership with them, and they did a sponsor at the Dallas Mavericks game, and whatever it was that I had to deposit, maybe it was $100, I think you got $125 in Bitcoin, right? But you couldn't withdraw that. I mean, it was kind of like gambling or DraftKings, like you get the bonus funds, but you can't withdraw them for X amount of days. I didn't really care. That wasn't what I was in it for. And I did it, and they paid. So, and some people got pissed because you had to tie in, you had to enter this specific promo code that Mark Cuban posted on his Twitter, and some people forgot to do it. And then they're like, well, I didn't get my stuff. And they were all mad. I saw, some folks on Reddit were mad about it. I'm like, I don't know, man. I followed the directions. I'm an old schooler. I followed the directions and typed the shit in, and it worked for me. So that's how I landed on Voyager. And then after watching some guys on YouTube who do crypto things, just more or less out of curiosity, I decided to try to get to some of the tiers where you get the interest. Right, I forget what they don't call it interest. They call it like rewards or something, or staking or something. And I've done it, and Voyager has paid the stuff. I haven't gone through with the fine tooth and comb, but I've gotten my bonuses. Just like they said, if I had X amount of Bitcoin, I get X amount of bonuses each month, and they're tiny, but it's something. So I've been happy, but I don't want to downplay what happened to Sniff. If there was some withdrawal problems, that I don't know about. And come to think of it, I don't know that I've withdrawn. I don't know that I've withdrawn anything. So, that would be a serious concern. Derek is not on the Bitcoin train. Just a bunch of scammers looking for a sucker. He's firmly in Bitcoin to zero. And you know what? I can appreciate that. Because as a give or take rational person who tries to support stock theories with numbers, you're going to struggle to do that with Bitcoin. Now, I will say on Bitcoin compared to some of the others, the one small thing that I kind of attach myself to with it is that it's not an infinite supply. It's not even close to an infinite supply. And every time I read a story that's, there's 100 versions of this story, that there are 20% of existing Bitcoins are in accounts that haven't been logged into forever, right? 10 years or something. And they're probably done. Probably never going to be logged into, so let's just say that those are gone. I like that, but that's probably me thinking in terms of like baseball cards, which my kids do, and football cards and stuff that I used to collect. So I just like that it's rare. I would probably never go out and spend 45 grand on one Bitcoin. I don't have I'm not in a hurry to get to one Bitcoin, but I think it has some intriguing possibilities. And in particular, the war situation, I am not surprised that the demand has went up. And let's see if I've got, 1 second. I'll try to bring up the prices here. Is this mine? Okay, so this is whatever, coin market cap. I think they're the biggest dogs. So Bitcoin is down, but last 7 days since the crisis, oh, you can't see it. Squeeze it in, maybe. It doesn't show very well. But the last 7 days, it's been up. Oh, here you go. 7 days percentage, up 10%. All of them have been up. Here's that USD coin that I bought into for $100, and it pays supposedly 9% interest. I'll let you know if I get that money or not. But it's worth it. It's worth it. I mean, at 9%, it's arguably safer than some of the stocks that I own. And then this is the other one I was talking about, Voyager Token. If you get a minimum of 100 of these boys, it unlocks something for you on Voyager. And I did that, and I just reached that point this month. So next month will be a good month for me to do a video update on it. It'll be nickels and dimes, but I should start getting the rewards for the stuff I put in there. Facebook down because Trump social network will do well. Interesting. Has PayPal hit a bottom? God, I don't even want to say that. But did we get back under 100 today? Because it was trending there. 101. I can't tell you that. I can't say that it's, I'd love to say it's the bottom. I think it is undervalued. I'm very close to Morningstar. I think I have 150 as a one-year outlook for it based on today's earnings projections. But I can't tell. I mean, the sentiment is so negative right now. Actually, we were talking about RSI earlier. Look at this. That's 5-year. Let's just go year to date. Okay, so that's better. 28, 1 year RSI, okay, is 28. You had an RSI, did it ever get below 20? There it is, 19. Unbelievable. It's like the company's going bankrupt, but it's not. I like the setup here. The only thing that's been painful for me is that I was at the 190 mark, and I think I've pulled down to 170 on just buying a share here and there. And if it goes under 100, I'll probably buy a few more. Might as well keep, just getting stabbed in the eyeballs. But I'm not worried about PayPal over the next 3 years. I'm really not. But it's been ugly. And I think that at this point, we're going to have to wait for the next earnings call. Oopsie. See if they put a date on that yet. Somewhere in the neighborhood of here. May 3rd to May 9th will be your next best opportunity for PayPal to get some life, because I haven't heard the executives come out. They should be buying back some shares. They have more money to do so, but it's hard to tell if they're doing it or not. And all that time, I didn't show you guys the chart, but here it is. I was talking about RSI. You're in the 30s. You were down in the 20s. Forgot to switch it over. All right, guys. I got to roll. A couple more. Reason BTC goes to zero is that the process is easy to replicate, which is why there's millions of coins. Yeah. So if I don't know anything about the names or whatever, I don't have a huge portfolio of all these different coins. And there's obviously some truth to Derek's point that, there appears to be nothing stopping anyone from making their own coin, right? So yeah, there's some truth to that. How you tie it to things, I'm not even going to speculate, guys, because I'm not the smartest guy. But here's what I know from the old man's standpoint. Ethereum is being used on websites for payments, right? And regardless of what your opinion is on the NFT world and such, it is being used as a transactional tool. So I can understand that. I don't mind having some Ethereum. Bitcoin, I already went through. Finite supply. We'll see. Is it so finite that it's worth $43,000? I don't know. I have no idea. right? But I don't mind having a tiny bit. The USD coin, I got it because it's on 9% interest rate, and I put $100 in it, and then I'll wait to see. So I've made way worse bets than $100 on things, and so for me, the risk reward was fine. And frankly, it was a mild curiosity guess. The Voyager coin, probably a pyramid scheme. I mean, who has to buy? Like, I don't have to buy in at PNC Bank where I am to get certain rates, but I was okay doing it because they did give you a lot of bonuses. And then additionally, the Voyager coin, for whatever it's worth, was in the neighborhood of $4 this time last year. And as stuff has melted, it dropped to like $1.50. And I was like, fuck it, I'm going to get in there. And so that's my rationale, and I don't want to sell it. I want to be careful when I tell you everything. Be careful to tell you everything, because I don't want you to think that I'm going like mortgaging my house for it, because I'm not. All right, Sniff gets the last call of the day, mid-2020, 1 Bitcoin, good for you, at 11K. He held it till 50, used profits to buy gold and silver, various altcoins. Kind of wish I would have kept it. And he says, Derek is the creation of the elite. That's an interesting way. Advertised as anonymous creator, but we all know this is what gives it value. Okay. And then crypto market is meant for you to get in and out. I've made awesome gains from buying low cap pre-sales and dumping before the majority do. So that's a good. I'm going to just make the broad assumption here that Sniff has infinitely more experience in it than I do. So I appreciate you sharing that, Sniff. And it does feel like it's a trader's game, right? It definitely feels like a trader's game. And I'm in there holding, which definitely worries me. I will say that even with my measly amount, if Bitcoin were to go $100,000 or something, I would probably sell my measly amount and wait for it to come down below that level again, and then maybe I'd buy back in. I don't know, but to me, Bitcoin has some staying power, if nothing else, for the brand, right? And I know it's not a brand, but if you go up to, say, my parents, or significantly older, they've heard of Bitcoin, right? Almost everybody has. Now, has anyone heard of Solana or whatever that one is? I don't know. I mean, I have, but I watched some of the videos. I think Bitcoin has some staying power because the old wealthy people are going to be curious enough to buy it. You're just hoping everybody doesn't sell out of it at the end of the day, just like PayPal stock. This is what happens when the world sells. It goes to $100. And so now we have to wait for people to buy back in. Hopefully they will. But, you know, PayPal, Alibaba, take your pick. There's a few of them that certainly are begging for buyers in this market. All right. Hey, guys, thanks for coming out. Thanks for supporting the channel. I really appreciate it. And hope y'all are doing well. And I'm sure I'll have a couple videos for this weekend. So take it easy. Have a good week. We'll talk to you soon.